Traders Corner is brought to you by IG.
Welcome to Traders Corner. As always, I'm joined by Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, it's a sort of sad world when we rely on central banks to give us direction in the markets, but this is the week of central banks because you've got Bank of Japan and the Federal Reserve in the States coming out with pronouncements tomorrow.
Yeah, that's right. It's a big week in terms of that, and really the markets have been kind of marking time waiting for these announcements. The Bank of Japan is a big one tomorrow morning. That's Wednesday morning, where they are. It's not sure, but it's sort of expected that they might dip deeper into negative interest rates than what they already are. So the markets will be very closely watching that. And then the Fed is on Wednesday night, and there's no rate hike expected, but we're looking to Janet Yellen to give us guidance as to what the future of the rate hike trajectory cycle might look like and whether we can expect a December rate hike. So those things are very, very closely watched. And then, of course, not that it's a big global event, but locally it is big. We've got the South African Reserve Bank this week also meeting on Thursday, where we'll also get an interest rate announcement. And again, no change expected there.
So you talk about marking time. You've got a chart of the S&P 500, and that's pretty much what it's been doing after last week's initial spurt of volatility. It's all gone quite quiet, I imagine.
It has gone a little bit quieter. The chart of the S&P 500 is up on the screen at the moment. What's notable here is that the market did break down below this lateral support level at 2160. You can see that there quite clearly. And that was a support level that had held up the market for about 7 weeks or 8 weeks before that. The breakdown came following the failure by the European Central Bank to inject new stimulus into the markets, and that was a disappointment, and that saw global markets taking a bit of a hit, and we suddenly saw volatility spiking when the S&P 500 gapped down. You can see now it's sort of locked in a range between 2120 and 2160, so we'll need to see what happens once it decides which way it's going to move out of this range. It's not clear at this point. I mean, you can say that your stochastic up there is a little bit oversold at the moment, but I think that's neither here nor there. I think the markets right now are. We're at a difficult time of the year traditionally anyway. September, October is often a bumpy time of the year. September traditionally is actually the weakest month of the year, which it has been this year. September's been weak so far. So there's still nervousness out there.
And the VIX, because that's the next chart that you've got, that did spike up. Has it now kind of quietened down a bit?
Yeah, so the VIX did spike. You can see there that it was early September when the S&P 500 broke down, and you saw the corresponding break to the upside in the VIX there. And it nearly doubled in a space of 2 days or 3 days there. But it's been coming back since then. Look, currently you've got the VIX trading at about 15, which is a lot higher than what it had been through July and August. It had been down at around about 12. So it is still at a slightly elevated level. And I look at this and I sort of wonder to myself, is this maybe like a falling wedge type of pattern on the VIX, which is about to give us another pop to the upside? It might not. I mean, you can see that it did that in June. It had a pullback and then another pop to the upside. I don't know that it'll necessarily do that this time, but if we do see negativity or nervousness coming about, perhaps the central banks disappoint us this week somehow, then there's a possibility that maybe the VIX does still perk up a little bit.
And our own markets, to bring it back home?
So this is the top 40 index, and here we've got, again, what we speak about so often on the show is this lateral support level at 45,000. And in fact, the market today is quite weak, and it's traded down to 45,000 on the spot index today. So we're testing that lateral support area now, today. And it's going to be very interesting to see whether we hold that and push up off of that support level now, or whether we actually break to the downside. What I'm very interested in is this weekly chart. And I've shown this previously on the show. I think I showed 2 daily charts side by side. But what I want to really point out is the similarity of the trading action on the top 40 this year relative to last year. This is a weekly chart, as I mentioned. So every candlestick pattern here represents 1 week worth of trading action. Yeah. And the 2 areas that I've highlighted there with yellow are the areas I want to focus on, just to point out the similarity in the trading action over the last year and again this year. So notice how in 2015 we had this sort of head and shoulders type of structure which eventually broke to the downside. Now in 2016 again we've got a complex head and shoulder type of pattern, and we're busy forming the right shoulder here now. And the big question is, will we start to break to the downside below this 45,000 area like we did in in 2015. And if you look at the other indicators here, look at your stochastic oscillator, how it was making negative divergence before into the top last year. Same this year, we've had negative divergence on that stochastic. And again, if you look at where the stochastic oscillator is positioned at this point in time, same as last year in 2015, it rallied a bit into neutral territory before turning lower again. And we've got a similar situation happening right now, where the stochastic has popped up, it's sitting in neutral territory. Does this now begin to turn lower? It's not to say that it's necessarily going to follow the exact same script, but it's remarkably similar.
Indeed. I mean, if we cast our minds back to the events of last year that pushed the market lower, one of them was the oil price and the failure of OPEC to agree any sort of production cutbacks. And that spooked, certainly spooked the oil market, which had a really negative impact on world markets in general. But it was also the prospect of the Fed hiking interest rates, wasn't it?
It was that, but the other thing, the other big catalyst that came about in August last year was with the Chinese. The Chinese stock market effectively burst its bubble. It crashed. And that had ripple effects onto the rest of the world. And that was the catalyst for us to come down. But there are still numerous catalysts out there locally now, well, not locally, globally now, that are very much sort of waiting in the wings that could potentially mean that these markets might break to the downside. So I think very much a cautious approach is still very much advised at this stage.
So in that light, you might be very happy to have an option structure, which you put on for the portfolio, 2 weeks ago, 3 weeks ago now?
I think it was even further back than that, it might have been. But nevertheless, yes, we've got this put spread option structure on, which is now in the money, actually. And you can see that the payoff illustrated over here. So above 46,500 is where we are sort of nowhere with the structure. We pay away our premium, which is just over 3,000 Rand. But then below 46,500, the structure starts to make money. It makes its maximum profit if the market goes below 43,500. And at that point, we can make nearly 27,000 Rand profit. So, if the market were to break down, then we are very well positioned for that. And at the moment, this is the only position that I've got in the portfolio for us. So essentially, you can say that I am bearish. I'm positioned bearishly. I'm short the market in essence because we've got this option structure on, but I'm not short in the sense that if the market rallies, we're not going to lose money. That's the nice thing about these option structures is you can structure them in such a way that you pay away a certain premium, which you then obviously kiss goodbye. It's like an insurance premium. But in the event that you need it, and in this case the event that we need it for would be a drop to the downside, well then we can cash in. And as things stand right now, it does look not too bad for us.
Yeah, I mean, Murphy's Law would be, if you hadn't structured something like this, the market would fall in a heap and you'd be really gnashing your teeth.
Well, that's why I feel I have to keep on doing these option structures. I know they're complicated. I know some of the viewers say it's a bit much for the TV show. But, like you say, Murphy's Law would be that I've done these things every quarter for now the last 2 years or so. And it's like, I say, it's like having insurance in place against a drop to the downside. And as it happens this year, we haven't had that big drop yet. But if we do, we're going to participate because we've got this in place. And yes, if I didn't do it, Murphy's Law would be the time the market gets a hiding. And then I'll really look dumb.
And we wouldn't want that.
We certainly wouldn't, no.
Garth, is the structure maybe of the top 40, and what I mean by that, the weightings of the shares in the top 40, are they instructive in any way for you? Because I know that you want to talk about them, and you've actually had re-weightings of the top 40. You've had certain shares that have come in and other shares that have fallen out.
Yes.
And I wonder how much the weightings of the top 5 shares in the top 40 have changed.
Yeah, that's correct. We had a re-weighting last week on Friday, and these things happen every quarter. It's a rebalancing of the top 40 index. So certain shares fall out, certain shares come in. It's all based on a market capitalization of the companies. And but you'll typically find that the movements in the top 40 weightings, where shares come in and out, it's very much at the tail end of the top 40.
Okay.
So you'll have the sort of the smallest companies of the top 40 falling out, and then some other companies might come in. But the movement is always there around the tail end. What you find is that up at the front end of the top 40, it doesn't really change very much. Like we've got it here. Now this I get off the satrix.co.za website. If you're ever wanting to look at the weightings of the shares in the top 40, go and have a look at the weightings in the Satrix 40 ETF. And that information is available on satrix.co.za. And what you can see here is that the 5 biggest shares here, Naspers, SAB Miller, Richemont, Billiton, and British American Tobacco, those 5 shares collectively make up almost 50% of the weight of the top 40 index. So those shares really do determine what the market's going to do. The rest of the shares in the index, their weightings are small, so they don't have a meaningful impact on what the top 40 is going to do. But what's quite notable here is that all of these shares are very much currency-sensitive stocks. 4 out of the 5 are dual-listed. SAB Miller, Richemont, Billiton, and British American Tobacco are dual-listed on European exchanges. And then Naspers is not dual-listed, but its biggest holding is Tencent, which is listed in Hong Kong. So also effectively, in a roundabout kind of a way, you could almost argue that that share similarly is a dual-listed type of stock in the sense that it derives its movements from whatever the share price of Tencent does overseas.
Which is partly why we're also obsessed with the currency and what it's going to do, because it has a huge bearing on what the equities market is going to do.
Well, that's right. And that's what I want to have a look at here, because it's very, very key to see what the Rand does. And on our market, it's quite clear to see on a day like today, the Rand is very strong today. The market is down 400 points at the time of recording this show. The overseas markets are up, by the way. So it just goes to show that the strength of the Rand really has held our market back quite significantly on a day like this. So it's very important, and it is instructive to look at the currency. So we're going to look at the Rand-Pound exchange rate here, and we're going to also look at the Rand-Dollar exchange rate. So the first chart here is the Rand-Pound exchange rate, and you can see it's basically been drifting stronger since May, in fact, since the beginning of the year, really, where it blew out. But if we look at the technical setup in the very recent past over here, sort of from August into September, what's notable is that the currency weakened sharply from mid-August out into the early sort of September. And a lot of that came about following the announcements that Pravin Gordhan was being sought by the Hawks for a warning statement, and that saw the currency weaken. So the Rand-Pound weakened from about 17 Rand up to about 19 Rand 50 over those couple of weeks. Now it seems all of that has kind of gone quiet, and we can hope it's going to stay quiet, but who knows in this country. And the technical setup here is such that the Rand-Pound exchange rate has actually broken below an important level here, which is 18 Rand 65. And that break to the downside now actually projects another move lower, which would give us a target of about 17 Rand 70. So, and we're not there yet. We're trading at around about, I think, just above 18 Rand to the pound odd today. So it still suggests that there's further Rand strength to come if that technical setup is anything to go by.
And similar picture with the dollar.
Similar to the Rand dollar, that's right. You can see the technical structure is quite similar here. Again, we had weakness from mid-August out into the beginning of September, but we've got a very similar setup here. It's almost like a sort of a reverse cup and handle type of pattern. Which is breaking below 14 Rand today. And that break below 14 Rand is actually bullish for the Rand, and it points to a move potentially down to 13 Rand 30. I think at least we could go and see that there's a big gap over there. That was I think when the Pravin Gordhan was sought by the Hawks. And that comes in at about 13 Rand 60. So I think we could certainly go and close that gap as a first target. But if that gets stronger to the downside, then 13.30 comes into play.
Yeah. Okay. So very important to watch this. If you're going to trade the top 40, for example.
It is very important to watch it, and also just in the context of what I was saying about the fact that our market is on that 45,000 support. These are the types of catalysts that could also lead it to break down.
Yeah.
So in a strong Rand environment like we have, with a couple of global worries and wobbles from overseas, yes, maybe we have the potential to break below 45,000 on the top 40.
Which would make you a happy man, and maybe let's show the state of the portfolio, because it is actually nicely in the money.
Yeah, it would make me a happy man in the sense that the option structure would be making us money.
Yeah.
And so it's never nice to gloat about a falling market. But the thing is that we are positioned for that. And our structure is making us some money now. There's the December option structure that we put in place a little while back. Now, right there, the theoretical profit because it is theoretical at this stage. Options pricing is complicated. So I'm marking it to market as if we were at expiry, which we're not. But if the market were to expire right now, we're up 5,942 Rand on that option structure, so up 18% for the year to date on the portfolio.
Well, don't count your chickens before they hatch. Garth, very quickly, if you want to get a weekly email, just show us how to do it.
Yes, please go to traderscorner.co.za if you'd like to receive a free email from us every week telling you what's going to be on the show. You just go to the middle of the page and there's a link there for the free weekly email. It's very quick and easy to sign up, and we won't spam you. We'll just send you one email on a Tuesday telling you what's coming up on the show for that week.
Great. Garth, we'll leave it there. Garth Mackenzie is, of course, founder and editor of Traders Corner.
Traders Corner is brought to you by IG.